My name is John Guerra. I'm right now the treasurer of CalRTA statewide, but I have been the treasurer for Division 71 for now that many years. A long time. Okay. When they asked me to do this, they wanted me to do something about the treasurer. Evidently, people are afraid of this position. They think that it's so hard that nobody can do it. Well, let me tell you, if I can do it, anybody can do it. All you have to do is pay attention to what you're doing. So I'm not going to do a whole lot of the nuts and bolts. I'm going to tell you some of the things the treasurer does besides counting beans. Counting beans part is easy. You take money in, you write it down, you spend money, you write it down, subtract it, and now you know how much you've got left. That's the beans part. Okay, this is the other stuff. What does the treasurer do? We hold the whole thing together. If it wasn't for the treasurer, the whole division or association falls apart. We don't want it to fall apart. So we hold the stuff that puts it together. At the beginning of the year, in the beginning, we need something to start with. What's the first thing the treasurer has to do at the beginning of the year? In the language of a treasurer, it's called a what? Proposed budget. Everybody gets one, or finds one, or makes one. It's a proposed budget. The budget is proposed. That doesn't mean that you can't change it. That's why it's a proposed. It's what you think you need at the time you made one up. Where do you find that budget? That budget is either already made for you, or you have to make one up. Because our officers usually begin their term, and hopefully it's not a life term, in May or June, we usually find that this is one of our first tasks. If you are what most people are, they're familiar with the division. You don't come in one day and get elected to be the treasurer without knowing your division. Hopefully you know your division fairly well. So coming up with a budget is not that big a deal. If your predecessor has not done so, you must develop one. Technical terms, that means you got to make one up. The problem with this is I can't hear all the laughter. You've got a couple of options, maybe three. If your budget is a blank page right now, you can make one up by yourself and then ask the board to approve it. The budget has several sections in it, two main sections. One is the income and one is the expenditures. So you start out with the beginning balance and you're going to add money to it, which could be your dues, your lunch money, donations, etc. Anything that brings money in, you list as income. The next part is, or the next thing, if you don't want to make one up yourself, you can meet with your board and develop the budget together. That makes it a little bit harder, because if you do it by yourself, you don't get all the negative comments. If you meet with your board and develop the budget, hopefully the negative comments are minimal. But you come to an agreement, and once you meet with the board, they vote on it and say, yep, that's what we're going to do. The one that I hate is when they tell me to form a committee and then have the board approve the recommendations. Way back when I was working in a school as an administrator, they said one way to kill a good idea is to give it to a committee. That'll kill it. So I hate that form a committee option. I would rather meet with the board, and the 5, 6, 7, 8, 10 of you, whatever it is, you get together, you come up with a budget. Usually you look at last year's and see what you did. Remember, the budget is a plan. It's not set in concrete. During the year, something almost always happens. Lots of things happen. So what? You just take care of it. None of our budgets are set in concrete. In other words, if you propose that you're going to spend $67 on administrative or president's costs, what if the president spends $69? Then your budget's out of whack. So don't worry about it. That's a so what. At the end of the year, you'll straighten all this stuff out. Sylvia, you've got to type your question. I can't see your hand. All I know is you've got it up. Type the question and somebody will read it to me. Thank you. Depending on your division's bylaws and or the standing rules, usually the treasurer can make minor adjustments or the board can make major changes to the budget. So if all you need to do is to increase your president's expenses, you look around in the budget and see another category that's not being spent. And if you need $5 to cover it, transfer $5. It's as easy as that. There's nothing that says that you can't do these little things. Nobody's going to smack your hand. The job of the treasurer is twofold. You keep a close eye on the monies expended and the ones that are still available. That's the two things you have to do. You have to make sure you know what's being spent, and you have to keep a balance. So you have to keep a sheet which starts out with, let's say, $100. You spent $30. And now you should be able to tell the board, I still have $70 left. The treasurers assist the board in developing programs and expenses in a way that allow for new ideas. Again, the budget is not set in concrete. Somebody comes up with a great new idea. This year, on the state level, there was no budget for this thing called MEP, the Membership Enhancement Program. There was no money for anything like that. When the board decided they were going to try this, we had to figure out, well, who's going to pay for it? And as you know, I budgeted approximately $500 for most divisions, and some divisions higher than that based on their membership. Altogether, I budgeted $42,000 to pay for this program. So far, we've spent $3,700. So those people who are almost finished with their program, let's get them done. You're down to about 4 weeks when I have to have that expenditure sheet so that I can get your division reimbursed for all the money you spent. So far, we have about 9 divisions who have finished, and their treasury already has their money in it. They've been very good at the state office in paying these fast. Yesterday, I got 2. They were paid last night. So the money is coming back very rapidly. So even though you may have spent some money, we're going to keep you solvent by getting that money back to you very fast. The treasurer cannot be a constant roadblock. In other words, Sally Jones comes up and says, I've got a nifty little project and it will be great for the division. The treasurer cannot stand up, stomp his feet and say, no, you can't do that. That's not the job of the treasurer. The job of the treasurer is to assist the board in making decisions and make things happen if it's a good thing for the division. So you're not there to block everything, although you will block some. because they're unreasonable. But by and large, if an idea comes up, 95% of the times it'll go. There's some mundane tasks that a treasurer has to do. These things are called reports. Those things that let everyone know what you're doing. You don't do things behind a closed door. There's a thing called transparency. And everything in the treasurer's job is transparent. Everybody can see right through it. So you don't get to go out and buy a car and charge it to the association. It doesn't work that way. The first report is the board report. And this is probably the most detailed because the board has a special interest in their money. They want to know what's going on, and they want to know if 30 cents disappears, they want to know where that 30 cents went. You've got to keep a listing of the monies received, both the source of that money and the amount of that money. For example, every year, or not every year, every month between the 2nd and the 5th of the month, your bank gets a deposit. Hopefully, the treasurer is in such a position that you can go into your bank electronically and see what's happened up to the last day. Usually they do all the deposits and the payments out by midnight, and they're posted to your account. And if you don't know how to do that, check with your bank. There's a way that you can log in with your account with the passcode, and you can bring up the money that's in the bank as of that day. You have to list all expenditures, and you be able to tell them to whom and what for and how much. That's the key. That makes everything work. If you know everything that goes and how much goes. If the board wishes, you also should identify the budget category. In other words, this was for lunch expenditures. This was for the newsletter. This was for the treasurer's bookkeeping or whatever. The president spent some money on sending out some notices. This year, we spent a lot of money paying for this thing that you're on right now, Zoom. The Zoom program costs approximately $150, depending on how many you buy at a time and where you get it and so forth. But a lot of divisions and a lot of area directors purchased the Zoom program because that's really the only way we can meet. You can't have group lunches, although they may hopefully be coming back, but you couldn't go out and buy lunches for 15 or 20 or 30 people because you couldn't find a place to do it. And it just became, I guess, against the rules, you might say. It's highly recommended that vouchers be used when monies are spent. In other words, this is a little piece of paper that says, Sally Jones wants $37 to be spent at Home Depot or Office Depot or wherever for the following items. And it's one way to really keep track of what you bought, when you bought it, and who bought it. And so when the person asked for $67, they ask for it by voucher or expense sheet, and you write them a check and you put the check number on that voucher. So you know exactly where that $37 went and what it was used for. Depending on the interest level of your division members, in other words, those people that are not on the board, this report can be as detailed as the board report, or in summary form showing the beginning balance, income, expenditures by category, and ending balance. This is what a lot of treasurers do for their newsletter article. They won't list every check. They might say, officers' expenses, $39, but it was really 3 different expenses. But just showing that it was a total of 39, usually that's enough for a newsletter item. However, if you have members in your division that really want to know the details, refer them back to that board report. It should all be there. The 2 biggies at the end of each year, after July 1, you now know what you did the previous year because your new year starts July 1. Let's put a set of parentheses after that. Almost every division has their year from July 1 through June 30. That's not a legal requirement. The legal requirement is that you set your year. It could be from September 1st through August 31st. It could be other things, but by and large, almost all the divisions, July 1 through June 30. Now you know what you did the previous year. You must report to the IRS, that's the big guys in Washington, and the FTB. I don't know how they came up with Franchise Tax Board, but that's the California group. You have to make a report to them once a year, and you do it on the computer. And it must be done by, it's either 5 months or 5.5 months, but it's usually in January, that's your deadline. However, you know all the information in July, so why not just do it? It takes about 5 to 8 minutes on the computer. And if you don't know how to do it, most of the treasurers do know how to do it, but there are ways to help you do it. The only information necessary to the IRS and FTB, and by the way, they're very similar, and that's that 1099 report and 599 postcard, it's called, is your division's general information. In other words, the name of your division, your tax number, and that is on the report that goes to the state. When you get the state report, they put your tax number right at the top of it, your division's address, the officers, etc. And whether you received $50,000 in income, you don't know how much, you don't have to know how many dollars you got. It is a yes or no answer. So when that question comes up on that form on the computer, all you have to do is say, yes, we got more than $50,000, or no, we did not. And if you said yes, you're in big trouble because the report for that is about 8 pages long. They want to know everything. So hopefully your income is 50,000 or less. And most of us, that is our answer. No, we didn't get more than 50. However, there are 1 or 2 that do. If you're unable to use the computer, the state CalRTA office will assist in this filing. You can either get Angelique or Brad to do it for you. You just need to feed them all the information. Now, be careful. If your division has a scholarship account or a foundation and so forth that are designated as the 501c3, that means the taxes are deductible. That is a separate report. In no way, no how do you mix these monies with the division monies. The foundation scholarships, this 501c3 money is totally separate. Think of it as a 10-foot tall cement wall. You cannot cross over that wall. You keep your division money and your foundation money separate. In fact, your foundation and scholarships have a separate board of directors. They have a separate treasurer. They have a separate checking account. everything is separate, and whoever's in charge of that foundation or scholarship has to file their own IRS and franchise tax board reports. Remember, they're totally separate. Do not mix them. Some of the area directors have asked me to look over some of the treasury reports, and it's surprising how many people mix those things together. You cannot do that. That's a big no-no. Then there's the CalRTA fiscal report. That's the one that goes to the state. This is the one that each division does in July. And you send that to the state office, and it's due by the end of August. This is the one that when you get it, it will already have your tax number and division number and all that kind of stuff on it. They print one separately for each division. Information on the form. You must fill in the beginning balance as of July 1, whatever year it is. Income from all sources, division money, expenditures by category, in other words, office supplies or travel, conferences, etc. And then when you list all the income, subtract all the expenditures, you come up with a number. And this is the ending balance as of June 30th of whatever year it is. Again, be very careful. Even on the state report, separate reports must be prepared for foundations and scholarship information if they have been designated as the 501c3. CalRTA itself is called a 501c4. The 4 means that we're tax exempt, but we're not tax deductible. In other words, we don't pay taxes on your dues and so forth. That's exempt. We're a C4. The rules and regulations totally separate. C3, be careful, keep those apart. We want to keep. Anybody want to explain that? Raise your hand. You got to keep us on the straight and narrow. It's usually the treasurer that keeps the division legal. An example. Many divisions have drawings, and there are two kinds of drawings. You have door prizes and you have raffles. There is a big difference. If everyone is given a ticket or tickets and a drawing is held to determine who gets the prize, item, money, gift, etc., this is referred to as a door prize. Anybody is allowed to do this with whatever amount of money you want to do it, as long as the important word there is the word given. If everyone is given tickets or a ticket, in other words, no money exchanged hands for that ticket. Everybody gets a ticket or tickets equally. However, if tickets are distributed through purchase, good deeds, donations, regardless of the amount, you're having a raffle. In California, a nonprofit organization, which CalRTA is, you must apply to the Secretary of State for a permit to have a raffle. The number of raffles, the type of raffle, the results of the raffles must be reported annually. You apply to the Secretary of State, and I think it's either a $10 or a $20 fee, and they will issue you a certificate or permit or whatever it is, and it says you're allowed to have raffles as long as you follow the rules. Somebody said this was a difficult job, being treasurer. I don't think it is. Let's see. Okay.
All right, we got some questions for you. You ready?
I'm ready.
Okay, what is the year of the most recent CalTrust Treasurer Handbook to download? Do you know?
I think it's the one that's in the book or on the website, dated 7/19/17, which means it's at least 5 years old. The information is relatively accurate. There are a few places and there were some things that are changed. For example, there are some names of people that are not with the association anymore. And she wrote most of that book. But that is the most recent one. One of my thoughts was when I became treasurer that I was going to revise that thing. It's still on the top of my bucket list, but it just has not gotten done. If there's somebody out there that wants to work with me and revise that, I'm more than willing to have you help me. Just send me a note. My email is jwgera@aol.com. Very simple. jwgera@aol.com. And by the way, if you have any questions about what I'm saying in this presentation, or if you have specific questions on the budget, which I did in the last session, and you want it answered before you get to vote on that budget, you can send me a question by email, and I will try to answer them either this afternoon or this evening, so that you have those answers prior to voting tomorrow. Tomorrow, there's a yes or no on the budget. More questions?
Yes. Another question is an audit recommended when a new treasurer takes over? And if so, why?
An audit is you might say, an outside or a third person taking a look at your total income, expenses, and how you're keeping track of your money. Many times I suggest that treasurers have a buddy in their area. In other words, the treasurer from division 110 and division 39, for example, they should trade each other's budgets and check them. There is no requirement that it has to be a professional auditor. It's just so that there is a third outside party taking a look. In fact, I don't think there's even a prohibition to, let's say, 3 or 4 people within the same division checking over all the numbers and so forth and saying we did audit the books and it looks okay. There's no official report that has to be made, but preferably it's an outside person, somebody from another division, or if you have a buddy that happens to be a CPA or something, have them look at it. Even if there's a cost, probably it would be allowable, but it's not a big requirement. I don't think has to be done every year, maybe every 2 years. That would be sufficient. Okay.
Okay, next question here is, what do we do if we failed to file required reports in 2019 and were inactive throughout 2020?
The IRS and FTB don't care. You must file those reports even if you did not get any income or expenditures. When you go onto that website where you file this, it will tell you you have filed for 2017, you filed for 2018, you filed for 2019. And if you didn't file for 2020, it's going to tell you none filed. So what you do is go in and basically tell them, we had no income, no whatever, and just so they know what you're doing. But there is a requirement that you must file that form. If you don't file it by January 10th or whatever the date is, you get a 6-month lapse time, you might say. But if you don't file within that time, they cut off your eligibility for being a division and so forth. They could come in and lock your bank accounts, which they did on one association that I know. They just go into your bank and say it's frozen until they get their reports done, which means you can't write checks, you can't make deposits, can't do anything. So those reports are very important, even if you have no money that came in. For example, as I said, the question is, did you have income of 50,000 or more? All you do is say no. They don't ask you what you spent. All they want to know is how much you got. And if you got nothing, just say it was less than 50,000. Way less. Anything else?
Yes, we have another question that says, our indemnity insurance is taken out of our dues. It makes sense to do it that way, but it's an accounting problem. How can I show it as an expense in Quicken and on my reports?
You don't have to, because you never get it. The state, sometime in July, pays the bill for the whole CalRTA statewide. We have a policy with the company, and it costs us somewhere in the neighborhood of 14 to 15,000. CalRTA just pays it. They then go back in and look at whatever division you're in. Let's say you're in a division that has 500 members. Out of either the July or the August payment that you get, CalRTA will subtract that premium. So you actually never get the money. It's the state paying it by taking it out of your pocket, you might say. You don't have to show it as income. You do not have to show it as an expense. Okay? That's the way we set it up.
Okay, the next question is, how do we find the required websites for the IRS and FTB?
Okay, if it's not in the handbook, it should be. If you're familiar with a computer, you go to Google and you just put that number in there, 990 postcard, and it will take you to that website. And the same thing with the federal one, the 1099. Google will take you to that website. It's very easy. But if you cannot find it, send me an email and I'll send you the instructions. Again, jwgera@aol.com. And if you've never done it and you're afraid to go on those websites, like you hate the idea of IRS, just work with the state office and they will help you file it, or they'll do it for you. But please remember that there are over 80 divisions and a whole bunch of scholarship programs that have to do this filing. They have offered to help you, but if everybody wanted the state to do it, it would take a whole mountain of their time. Remember, our state offices are still locked. They can get in, but they cannot have more than one person in the office at a time. So their hands are tied as far as the volume of work that they can do. They are doing most of their work, you might say, virtually. Their computers can dial into the state office. And so most of the work that's being done, like Johanna with the membership, she does most of that at home on her home computer, dialing in. So again, the state office can help you with it, or I can send you those links. Okay?
Excellent. And I have one more question. It says, is a printed paper available to send or email to us about the state and federal yearly reports and about the Caltra Fiscal Report?
There's nothing that I know of. The only one that I know where you get a paper form is the state report. And somewhere between the 1st and the 15th of July, you should get, either through email or US mail, you should get that form. You fill out that form and you can send it back to the state electronically, or as I do, I print it, fill it out, and I send it to them. I either scan it or whatever. Supposedly that thing is fillable, but I've never been able to make it work. But I'm not a computer guru. But I always fill it out, scan it, and send it to them. Again, it's not a big deal. You start with whatever money you start with. You add the money that you got, everything, whether it's interest, dues, lunch money, and lunch money is an income item. And lunch money should be an expenditure item. So you're actually going to have lunch money in both places. You get it, you spend it. You must, and you don't have to show every separate line item that you use. You can say officers' expenses as one line item for expenditures. And that could be the treasurer, the secretary, the president, and whoever else is an officer. You could lump all of their expenses as one line. And when you do the conferences, take all your conferences, whether they're local, state, whatever, add all those together, it's one line. So you're only talking about maybe a half a dozen lines of expenditures. Many people have like 15 or 20 line items that they have as categories in their budget, but you don't necessarily have to do them all, as long as you include them somewhere when you bundle them together. Other questions?
Yes, another question is there a yearly calendar treasurers can look at to keep on track?
It's in that book. It's the guidelines and information requirements. That's that book that's in the on the website. There is a calendar of things that you should be doing every month. If you look at that book on the website, you'll notice that that page is printed what they call landscape. It's not portrait, in other words, up and down, it's left and right. You can read it if you look at it on the computer. But every time I try to print that book, I get an error message because that one single page is landscape and the printer does not like it. So you can print pages 1 to 11, for example. Then you can print 12 through or 13 through whatever the ending is, then print that one page separately and you can do it. But the printer that I have, it does not like switching in the middle of the road, you might say. But it is in that handbook. I'll tell you what page it is. It's page 10. Page 10, it doesn't like the horizontal formatting, but it is in the on the website, page 10. Another question?
Yes. The next question is, our division is interested in discounting the fee for a new membership or giving a dollar amount prize to an existing member for bringing in a new member. Can we get MEP reimbursement if we do that?
The dues for the state are $66. The state holds on to $44. The division gets $22. So if you want to discount somebody's membership by $1, for example, the state still gets 44. The division would then have to come up with the dollar. In other words, you reduce your money by $1. I don't know of any provision where the division can say your dues are only $64, for example, and everybody else is going to pay 66. The money has to be, you might say, even. Everybody pays the same dues, whether it comes out of your pocket, the division's pocket, or whoever's. But if the division wants to reimburse by $1, I don't see a problem with that. Many divisions give free memberships as an incentive for somebody to join. But if they do that, they have to write a check to the state for $66. The state would then reimburse them 22 and hold on to 44. But it holds that everybody's membership cost is $66, regardless of where it comes from. Hope that is clear.
Yes. And the last question, and I can go ahead and type this in the chat so everyone has it, is what is the name of the book and do they have to print it? And where on the Cal RTA website can they find it?
On the Cal RTA website, there's a thing called Division Resources. And if you really have good glasses, when you go on the Cal RTA website, somewhere in the upper right quadrant of the screen with a blue background, there is a little bitty magnifying glass. That is a search engine. Click on that and type in guidelines, information, and requirements, a handbook for Cal RTA Division Foundation Treasurers. And it should take you right to it. But if you just look in the website, it's under Division Resources, and there's a section called Handouts or Handbooks. It's called the Division Handbook for Treasurers, and that's where it's at. Again, if you can't find it, send me an email and I'll tell you specifically where it's at. I can't open that page to look at it right now, but that's where it's at. jwguerra@aol.com. More?
Nope, that looks like it's it.
Okay, then I guess we're done.
Well, thank you, John. We appreciate your time. And everyone, if you need to get in touch with John or have further questions, please go ahead and let us know.